If you care about your investments, then why the heck are you not watching copper right now? Because if history is any guide, copper has warned us before every single major crash, most recently the GFC, and it is doing again right now with the highest price in the last 60 years and nobody is talking about it. So in this video, first I'll show you exactly why copper is such a reliable indicator in the real economy. Second, I'll explain what copper is saying right now, and finally, I'll show you what this means for us investors. If you're new here, I'm Ace, and I have a bachelor in finance and equity investments, and I built a 400k plus portfolio in just under 5 years by following Buffett's principles and the 18-year real estate cycle. Early in my investing journey, I was glued to stock charts, thinking that's where the answers are. Then I noticed one thing. Before every big downturn, copper broke down first. In 2008, copper peaked months before the housing market actually collapsed. In 1999, before the tech bubble burst, copper was already rolling over. And in the early 2020, copper collapsed just weeks before COVID rocked the markets. That's when I realized copper was not just like any normal commodity. It was like the check engine light of the economy. You don't ignore it because if it's flashing, something under the hood is about to break. Quick disclaimer, I am not a financial advisor. Everything I share here is only my personal opinion for education and entertainment. Always do your own research before investing. Now let's start with the first point. Point 1, why copper is a reliable early signal. Now copper is in everything, right? It's in the wires in your home, the circuits in your phone, the motors in your car, and the pipes in your buildings. It's also critical for big projects like power grids, electric vehicles, and factories. That's why economists call it the metal of growth. But here's the simple idea. When copper demand is strong, it usually means the economy is humming or doing really well. Companies are building, consumers are spending, governments are investing in infrastructure. But when copper demand slows down or prices fall, it's often because builders and manufacturers are cutting back. And that slowdown usually shows up in the wider economy soon after. And history has proven this. Before the 2008 GFC, copper peaked months before the stock market collapsed. In the 1999 dot-com bubble, copper rolled over at the same time with the S&P 500, showing that the real economy wasn't keeping up with the inflated tech valuation. And in early 2020, copper collapsed weeks before COVID officially shut the world down. Each time, copper's weakness foreshadowed the pain that would hit broader markets. But copper is not perfect. In 2011, copper prices dropped quite sharply, but the global economy didn't crash. Why? Because much of that fall actually came from the oversupply of copper and a cooling Chinese property market, not a systematic collapse. And right then, if you had taken copper alone as your core signal, you would have sold too early and missed the continued bull market in stocks. So here's the takeaway. Copper works best as a leading signal when it lines up with other warnings, like credit tightening or land values peaking. Alone, it can be quite noisy, but in context, it's one of the most powerful early alarms that you can track. Now before I move on, if you do want my monthly breakdowns of signals like copper and how they fit in the 18-year real estate cycle, make sure to subscribe to my free newsletter, link in bio. Now let's move on to the second point. Point 2, what copper is saying right now. So here's something we need to be especially careful about. Copper is not just weak, it's near record highs. Copper futures recently broke past $5.72 per pound in the US, a new all-time high. Prices in metric tons are above $12,300 per ton, pushed up by tightening supply and import tariffs. At the same time, stock market is at all-time high as well. The 18-year real estate cycle suggests that right now we're in that late cycle phase where things can still look pretty good, but vulnerabilities increase so much. And right now, demand is still strong in certain sectors, but some signals are weakening. China's construction and infrastructure demand isn't accelerating uniformly, trade and tariff risk still remain. Now, Goldman Sachs recently lifted their forecast to nearly $10,000 a ton, while JP Morgan expects copper to dip closer to $9,100 in the second half of 2025 before recovering. So when you combine copper being at its high with signs of overheated cycles elsewhere, that raises the odds of a pullback sooner than later. So what does this actually mean? Think of copper like a smoke alarm in your house. If it goes off, it doesn't always mean there's a fire. Sometimes it's just, the toaster burning your breakfast. But you don't ignore it, because when it does signal a real fire, you want to be ready. and copper works the same way. Sometimes it's just noise, but when it lines up with other warnings, it's the real thing. The signal is when copper's weaknesses line up with other late cycle warnings, like tightened credits, slowing housing, or failing land values. That's when it reliably points to economic slowdown. The noise is when copper dips for short-term reasons like oversupply or seasonal restocking. That's temporary and often reverses very, very quickly. Finally, let's talk about our third point, point 3, what this actually means for us investors. Now, copper is sitting at record highs right now, alongside with the stock markets and real estates, which tells us something very, very clear. We're late in the cycle. This is the part where optimism is very clear and it's the greatest, but risk is also the highest. So what do you actually do with this knowledge? Now, first, you don't panic. Remember, copper doesn't move in a straight line, and short-term pullbacks can be noise. But when copper starts rolling over while the 18-year real estate cycle is peaking, that's when you need to tighten risk. That means building up cash reserves, reducing leverage, and preparing your buy list of high-quality assets you want to scoop up during the downturn. Crashes don't destroy wealth, they transfer. The investors who prepare before the resets are the ones who walk away with 5x or 10x opportunities once the fear takes over. So if copper is the smoke alarm, don't ignore it, but don't run for the exit just because it beeped once. Use it as part of a system, of your own system, and align it with cycles and let it guide your timing and your positioning. That's how you turn warning signals into wealth building opportunities. So if you do want my full cycle playbook, the exact signals I track every month, subscribe to my newsletter in my bio right now. Now I want to hear from you. Do you think copper's latest move is a real warning or just noise before the next leg up? Drop your thoughts down below in the comment section and don't forget to subscribe.